Welcome everybody to the CSE special presentation. This is a CSE Listed Issuer Education session with CIRO. I'm one of your hosts today, James Black with the Canadian Securities Exchange, and welcome again to today's program. We've got a great lineup of speakers, both including those from the Canadian Securities Exchange and from CIRO. And we'll talk on a matter of topics. Highlights for today will include a detailed presentation by CIRO on equity market surveillance and how the organization works with the Canadian Securities Exchange. Insights from CIRO's geologist on how to keep your disclosure on side with 43101, opportunities to address common regulatory compliance and surveillance questions and concerns from issuers, and recent CSE policy updates. We do have a presentation agenda for today. By request of CIRO, we do have an intro video, and this is part of the table setter for today's discussion. Following the video presentation, there will be a quick mining presentation as well, delving into some of the deeper topics around mining and 43101 disclosures. And then we'll introduce speakers from CIRO to answer your questions, some that have been pre-submitted and those that we'll nominate to have answered on today's call. And then we'll introduce my colleague, Alexandra Cosgrove from the CSE's office in Vancouver, talk about some of the updates on our end, and then we'll end with another open Q&A. So without further ado, as mentioned, I'll play the video, and then we'll get into our mining presentation with Chris.
Welcome to CIRO Equity Market Surveillance. In this video, we will show you how markets are monitored in real time and what happens when we identify a potential breach of the universal market integrity rules or a violation of exchange rules. We provide these services under a regulation services agreement with each equity marketplace operating in Canada. Market surveillance has touch points throughout the trading ecosystem, including with issuers to administer timely disclosure policies, including halts and news dissemination. Dealers to engage in ongoing dialogue about market activity. Marketplace operators and the clearing corporations to assist with volatility controls, technical disruptions, and trade rulings. And other regulators to refer cases, share data and information, and consult. Our market surveillance team is responsible for two main duties: monitoring trading activity and implementing the timely disclosure policies of the stock exchanges. Our work in implementing timely disclosure policy includes reviewing pre-filed press releases before they hit the wires and reviewing others after they are published. Do not be alarmed if you receive a call from one of our surveillance officers who may offer guidance for future releases to help your firm stay on side of the exchange requirements. Requesting halts for the release of material information must be done over the phone. We cannot accept a halt request by email. According to exchange policy, halts are intended to be short, typically measured in minutes or hours. Our surveillance officers need to gather information from you so that CIRO can make the correct regulatory decision. The answers you provide to our questions are kept in the strictest confidence. CIRO monitors stock exchange trading activity and coordinates with issuers for press releases. But does CIRO regulate the issuers? The answer is no. CIRO only regulates registered dealers and registered individuals. We have jurisdiction over the supervisory activities of dealers who monitor their clients' trading activity. Dealers must be ready to answer for any potential breach of the rules detected by CIRO. So why is it CIRO's job to halt trading for the dissemination of issuer news? It's CIRO's responsibility to halt stocks for material news since it administers the timely disclosure policies of the exchanges under a regulation services agreement with each exchange. Halts for dissemination of news are intended to be short for the imminent release of material information. Marketplace operators, including stock exchanges and alternative trading systems, look to CIRO for advice on halting and resuming stocks, which happens daily. At times, price volatility controls can delay an order until CIRO gives the marketplace the okay to let the order trade. Other interactions with the marketplaces include discussion around timely disclosure policy, trading rules, and coordination around any technical issues. CIRO has strong relationships with our regulatory counterparts around the country and around the world. We do not have authority over asset managers, individual investors, or trading of Canadian listings in other countries. However, when CIRO detects market misconduct extending beyond our reach, we can and do refer cases to other regulators, including FINRA, the SEC, the CSA, and others. We have developed relationships with other regulators to facilitate the exchange of information, including the Intermarket Surveillance Group, the International Organization of Securities Commissions, and the Cross-Border Market Fraud Initiative. Next, let's talk about surveillance MO and the stages of a query. Real-time equity market surveillance is a key component of CIRO's market monitoring operations. Sophisticated software developed by global market operators and customized for Canada's unique market structure is the backbone of CIRO's surveillance operations. Every bid, offer, iceberg, tick, quote change, and trade are captured by the system and reviewed in real time. Events falling outside of the parameters set by CIRO in accordance with the Universal Market Integrity Rules or exchange rules create alerts. These alerts are reviewed in detail by CIRO surveillance officers. CIRO's data feed contains real-time data from the marketplaces, including data not available in the public feed. For example, the public may only see the broker number, volume, and price, while CIRO, through the market regulation feed, can see the broker number, volume, including hidden iceberg volume, price, price limits, date of entry, date of expiry, trader ID, and name, account number at the broker, legal entity identifier, short markers, jitney markers, and more. The broker number CIRO sees is never anonymous. CIRO can see if the broker is using the anonymous number 1 broker code. However, CIRO has transparency on this piece of information. All of this data allows the CIRO team to observe a complete picture of market trading. CIRO makes no assumptions when piecing together a trading scenario or a potential violation of exchange rules or the Universal Market Integrity Rules. From time to time, CIRO's surveillance team receives queries from issuers and other interested parties when they observe behaviors in the marketplace which look contrary to the Universal Market Integrity Rules or the exchange rules. These observations may include indications of suspected layering, spoofing, short-selling violations, or other price manipulations. So how does CIRO investigate observations or complaints originating from market participants? The first stage is for our surveillance officers to review any alerts which may have fired during the period in question. At this time, CIRO will also ask the party making the query for any non-market data related information which may provide color to the story told by the market data. After reviewing the data and information provided, if CIRO finds evidence to support a potential breach of the Universal Market Integrity Rules, the case will be forwarded to CIRO's Trade Review and Analysis Department for further investigation. In the second stage, our Trade Review and Analysis team takes a deeper look at the trading activity. Depending on the type of allegation, Trade Review and Analysis may request further information from our dealers to complete its review. Requests can include books and records of dealers if required to confirm or support a finding. If there is a finding of a breach of the Universal Market Integrity Rules, Trade Review and Analysis refers the case to CIRO's Enforcement Department or to the appropriate regulator. The enforcement team conducts an independent investigation and analysis. It also obtains information from various sources, including investment dealers, other domestic and international regulators, and the Canadian Depository for Securities. Where warranted, enforcement may pursue disciplinary action against the dealer. Once concluded, the matter is made public. So, now let's talk about short selling. Short selling occurs when a participant sells a stock the investor does not currently own. Prior to the entry of a short sale order, the dealer must have a reasonable expectation that sufficient shares will be available to settle any resulting trade on settlement date. A short-selling investor may deliver and settle by way of a stock loan, conversion of a convertible security converted in time for regular settlement, or delivery of shares from the exercise of warrants received in time for regular settlement. Market makers and certain Other price-neutral trading strategies are required to mark all buy and sell orders explicitly as SME, short marking exempt. CIRO sees and monitors this SME activity directly in our surveillance system. These SME strategies must demonstrate a consistent history of being price neutral over an historical period and are generally flat at the end of the trading day. Removing these strategies from the long-short marking regime helps individual dealers and CIRO track and monitor true long and true short trading activity. When a security is listed on one or more foreign markets, the stock will be subject to potential arbitrage as FX rates move and bid-ask quotes fluctuate. Short selling is allowed in Canada, but there are abusive short selling practices such as naked short selling that are not allowed. Naked short selling is an abusive practice where an investor sells shares short without a reasonable expectation of settling that trade on the agreed settlement date. The responsibility for preventing naked short selling primarily lies with the executing dealer, whose books and records are regularly scrutinized by CIRO. CIRO also monitors overall market activity to detect potentially abusive short selling patterns. Other controls are in place, such as marketplace and clearing rules, to ensure a failed delivery will proceed to a buy-in process where a market price penalty is assigned to the seller who has failed to deliver. Dealers must also take steps to control any further short selling of any trader or client that has unreasonably failed to deliver stock after an extended period of time past the trade date. Short selling activity, as it is reported to CIRO by dealers, is reported on CIRO's website and updated every 2 weeks. This information is indicative of trends and flows over time. A word of caution. These reports will only show a single point in time. The short position data provided is an aggregation of data supplied by dealers and is not validated by CIRO, and therefore may contain some errors from time to time. What is important to look for is what has changed from one point to another. If there has been a large change in short positions and short trades, investors have the benefit of seeing this and assessing the potential cause and effect factors that may be present. CIRO is committed to protecting market integrity and works closely with other parts of the trading ecosystem to achieve that goal. Issuers, dealers, investors, and others all have a role to play. CIRO's strength is its state-of-the-art technology, which leverages enormous amounts of non-public data to detect breaches of market rules. We continue to adapt and work with other regulators to fulfill our mission.
Chris, how you doing?
Great. How are you doing, James? Thanks for the introduction. So my goal today is to provide a starting point on which to approach mining and mineral exploration technical disclosure for our CSE issuers here today. So just a cautionary statement in terms of use. These are my views and maybe not necessarily those of CIRO. CIRO Surveillance West has 6 surveillance officers and 2 geologists to serve you, the issuers of the CSE. The 2 geologists are Ralph and myself, and our team can be contacted by email or telephone. So why do we have a presentation for mining issuers? And why do mining issuers have different compliance requirements than other issuers? Well, there's currently 300 plus mining issuers listed on the CSE, and they make up approximately 40% of the listings. CSE policy requires mining issuers disclosure to comply with extra disclosure requirements, including National Instrument 43-101 requirements. So I'm going to take this time to go over some common disclosure issues, and we see these quite often. Overly promotional language, the selection of a qualified person, and then we're going to touch a couple of technical topics that are kind of everyday misses. So have any of you ever had the desire to raise up your arms and call out world-class discovery or lay the adjectives on thick with an exceptional high grade? An important aspect of disclosure, especially technical disclosure, is that it's fair and balanced. There are a few phrases that have just proved to be too enticing for a promotionally inclined issuer, and these have been flagged by the regulators because they've caused problems. They're typically indefinitive, not factual, and have a long history of being problematic. And they've been publicly discouraged by the BCSE, the CSA, and listing venues. Oftentimes, I'll have an issuer phone me up after receiving comments and provide a justification for using a promotional phrase. Usually the justification is pretty good. And so I usually say, hey, why don't you communicate that justification instead of using a promotional phrase? So 2 tips that I'd like to stress to avoid overly promotional language are focusing on data-first communication and keeping this rule of thumb in mind. If you wouldn't put it in a technical report, don't put it in a technical press release. A really important aspect of technical disclosure is the qualified person who either prepares or approves that disclosure. They're the ones taking responsibility for the technical aspects of the disclosure. You as issuers want to ensure that the QP is a member in good standing of a Canadian professional organization or one of the associations listed in the National Instrument 43-101 companion policy, and that they're an expert on the subject of the technical disclosure. So how do we define an expert on the subject of the technical disclosure? Expertise on a subject is determined by the qualified professional's education that underlies the area of their practice and a minimum of 5 years of professional experience on that particular subject. So typically on, a press release that's disclosing a metallurgical report, we would expect to see somebody with a PEng and a specialization in metallurgy to act as that QP. One of the challenges that we have is it's very evident when a company just copy and pastes in a QP statement without the QP actually reviewing and approving the disclosure. A key aspect that's often missed is stating the QP's relationship to the company. Now, I'd like to take an opportunity to cover a couple specific technical topics. These often get missed. One is a true thickness statement or true width statement. True thickness is commonly missed when disclosing drill results, especially in early stage drilling. Ideally, every intercept would be drilled perpendicularly through mineralization, and if it was, the drilled length would equal the true width. But the reality is that can't always be done, and there's a myriad of reasons. Pad locations, including access to water, accessibility, safety, or the testing of multiple pierce points or targets from one pad often results in drilled intervals or apparent thickness, not representing true thickness. When it comes to disclosing these intervals, it's important to provide either the true thickness of the interval or describe the general relationship between the apparent thickness and the true thickness. If there hasn't been enough drilling to define the mineralized zone within a domain or a project, then state the relationship between true thickness and apparent thickness is unknown. One little tip, don't say that your true thickness is unknown if your cross sections include outlines of your model. I've seen cross sections with model outlines suggesting that the holes were drilled down dip, which then reported true thickness is unknown. You don't want to be that issuer. If your model changes, disclose that and update your true widths going forward. Another really important aspect of a technical release, especially one that discloses sample assays, is a QA/QC section. Oftentimes, issuers forget to either paste it in or it is just missed generally. It provides the support needed to back up the results that are disclosed. If the results are the what is there, the QA/QC procedures are the what did we do to know it's there. Some important aspects to include in the QA/QC section are the type of samples. If they're drill core samples, add the diameter of the size, or the diameter or the size of the core. So like HQ, NQ, NQ2. The processing that was done on the samples, for example, core splitting or sample preparation at the lab. A description of any quality assurance or quality control programs, the insertion of standards, blanks, and duplicates by you, the issuer, and by the lab. Your chain of custody procedures. How did your samples get to the lab? Who was responsible? Did you use any security procedures? The analytical techniques conducted by the lab. And try to go into detail so that your investors can look at third-party resources, look at the lab's resources and find out what those analytical procedures were and those analytical tests were. The lab's city and country, their certification, and their relationship to the issuer. And any verification techniques used by your qualified person to validate the data received. So I want to leave you with 3 strategies. Number 1, Get familiar with the regulations and policies that govern disclosure. These include National Instrument 43101, CSE Policy 5, and the resources on the BCSE mining page. Second thing is find the right qualified person to prepare or approve your disclosure. Make sure they are a professional member of an acceptable organization and have both an education in and at least 5 years of professional experience on the subject that's being disclosed. And pre-file with CIRO. Our surveillance team is happy to vet your press releases and provide comments prior to dissemination. We have a portal. We ask that you use the portal to submit your press releases. And we typically can turn around same day if the press release is submitted early enough. And I'm happy to take any questions.
Awesome, Chris. I'm now going to introduce Alexandra Crosgrove from our Vancouver office. Alex, welcome to the presentation today.
Hi, James. Thanks for having me. Hi, Chris. Thanks so much for that presentation. We do have a question, and actually you've somewhat addressed it during your presentation, but we received this from one of our attendants. My company was recently halted for using the term bonanza grade, a phrase that holds a well-established and specific meaning within geological and mining contexts. While we did apply the term appropriately, and in accordance with the technical definition, CIRO deemed its use as potentially over-promotional. This raises a broader question. If terminology grounded in scientific classification can be viewed as promotional, does this suggest a trend toward discouraging the use of descriptive or technical adjectives altogether?
So the short answer there is yes. We discourage the use of industry jargon, and we want to support the use of data-first communication. The audience for disclosure is the public, and disclosure must be accessible to them. That particular term, bonanza, is problematic and has been publicly discouraged by the securities commissions, the CSA, and listing venues numerous times over the years. A good rule of thumb would be if you wouldn't put it into a filed technical report on CEDAR, don't put it in a press release.
Okay, well, thank you. And James, I wonder if we could also introduce Steve Stojanovsky to the floor.
Good afternoon, everyone. Hi, Alexandra. How are you?
Welcome. Steve, would you like to tell everybody your role with CIRO?
Yeah, thanks for having me. First of all, before I begin introducing myself, I just want to, give you a round of applause for all the CSE staff doing an excellent job today. It's really great that we're bringing regulatory aspects like this to the forefront and helping everyone learn. I'm the Senior Director of Equity Surveillance for the Vancouver office. Myself and Stephen Repstock, who is our Regional Manager, watch over the team that Chris and the surveillance staff are on. There are, that means a total of 8 of us, and including Ralph, there are 9 of us on the team that watch over equity trading on the venture markets, in addition to helping manage timely disclosure for all the listing venues, for the junior market listing venues. So we're not only looking after CSE issuers, we're looking at other issuers as well at the same time. Our primary role, as Chris has been talking about, is in terms of timely disclosures, managing the press release workflows. A couple of things that I want to talk about on my side is I want to announce to the group here today that with CSE's help, we're really bringing something new to the forefront, a new offering to the issuers. We're extending the office hours and availability for our geos, going in later into the evening to help service the West Coast a little bit more. So while we don't have a definitive closing time, but our geos will be available beyond just our usual 4:30 p.m. Eastern time in the afternoon. So this is a test pilot. We're trying to see whether the cost benefit is beneficial to all parties involved, and whether the market really embraces this and appreciates and is able to use the new service. We hope that we can roll out permanently in the future, but we're going to give this a go for about a quarter and do an evaluation after that time. I think the other piece of advice that I wanted to share with everyone is, in partnership with the CSE, they're quite understanding and providing proper disclosure using accredited newswire services. There's been a shift in policy somewhat recently, moving towards the more accredited newswires in Canada. We're trying to move away from issuers relying on no fee, no cost news release providers who we know um, can and have altered content of press releases by issuers in the past, and we want CSE issuers to primarily use the primary providers, the Cisions, the Newswires, Newsfile Canada, Business Wire, Globe Newswire. Those are the ones that we're connected to and we rely on. They're the cog that keeps the disclosure wheel turning at all times. So we ask that you focus on those newswires instead. And if I can talk a little bit more about like what we do in surveillance room, our office, we're available from 7:30 till 5 o'clock in the afternoon Eastern time. Yeah, I have staff that extend across that time to help service. Obviously, our mornings are a little more hectic as we're dealing with overnight pileup from the day before. And as we get through the morning, we go into the market open. Then we go into a little quiet period where we become a little more available and accessible. And again, we get busy later on in the afternoon as we enter the close period.
Thanks, Steve, so much for that information and background. I'd also like to invite Alex Taylor to the stage to join us for any additional questions. And hi, Alex, how are you?
Yeah.
Would you like to introduce yourself?
Yeah, hi, Alex Taylor. I'm the VP Surveillance, and we're grateful to have the chance to talk with you today. I just was going to say a few words on top of that. So, good drill down on content today and suggestions. Get to know us, get to know what we do. Just to sort of emphasize some of the things we tried to convey in that video is just how we operate. And, when we deal with issuers, we deal with traders, we're sort of a black box. Like what we do with our reviews and our processes it's not shown, it's not demonstrated to anyone. But, the video was there to sort of walk through the one part of it that revealed that, what you see publicly is trade volume and price. And what we see in our real-time market data feeds is so much more than that. So we have a custom bespoke regulatory feed, and in real time we see the short marker. If it's a short marking exempt individual, we'll see that marker. We'll see the client type, if it's direct access, if it's retail. These are all inputs to our alert algorithms. And if there's an inquiry or a complaint, we're seeing that on our visualization displays. We can drill down at these levels, at the broker level, trader level, client level, as the basis for the beginning of our review. So I just kind of wanted to sort of emphasize that when we do get a complaint or if we do get an alert, we're drilling down with that level of granular detail. And the other point I just wanted to make just generally about those workflows is that every alert, every inquiry, everything we do is logged, is tracked. And when it comes to issuer interactions as well, we're able to share the record of contact with issuers back with the exchange so that there's no broken telephone or missing of information. We share information freely with the exchange. And, these are just things I wanted to say about how we operate, because I know if you've raised a question or a complaint or an inquiry, we won't have the opportunity to sort of share that information with you, but just wanted to assure the group here that is actually how we operate. That's what we do. And so I just was appreciating the opportunity to kind of get a chance to drill down. And of course, we're going to save some time for questions. So I'll pass it back to you, Alexandra or Steve, if you have anything you wanted to add.
Thank you, Alex. That's great. I would like to bring a question from the floor now for Chris. The summit is hoping that you can discuss the proposed changes to NI 43-101.
So unfortunately, I can't discuss that as, I'm certainly an observer in that process, but we are still waiting for guidance from the Securities Commission's and the other regulator community before we implement those changes. They're currently a proposal right now. We are operating on the regulations that are law, and so sadly, I can't speak to that question at this time.
And was there a high-level document that's been published?
That's correct. Yeah. So the securities commissions have put out some drafts for review by the public and by the issuers, but at this time, it's still in the proposal time frame. It's not been enacted yet.
Okay, thank you. So we can we may be able to provide some information for that post for the group as reference material. Okay, we've got another question. How do you deal with social media posts that are not related to the company? Social media posts not related to the company.
Well, if they're, our first approach is, if it's not related or coming directly from the company, we treat it as third-party information, much like we would analyst commentary. If there happens to be an analyst that puts out a recommendation, we would treat it as third-party information. We would advise issuers to not comment or not directly acknowledge such, as it might bestow on you responsibilities afterwards. If you do follow through with some sort of comment, the Securities Commissions in their semi-annual review might require you to provide updates to any changes in comments or of opinion. So I would recommend that with social media, that if it's third party, if it's legitimate third party, I would leave it. I wouldn't embrace it. I would try to try to provide arm's length distance between you and that social media. For everyone's knowledge, there is policy coming very soon from the CSA and the BC Securities Commission on their expectations on how social media should be managed and how it will look in the future. I don't have much knowledge into what that's going to look like, but it's probably been consistent with past policy that they've put out with regards to being overly promotional, owning language, owning ideas, and being aware of what is being discussed and what the narrative is of any social media that's being conducted on your behalf by you, the organization. So we'll wait for those comments. We're eager to see them as much as you are. I suspect that they will be out probably in the fall or in spring of next year. But I'm not the BC Securities Commission, so that could get pushed back a little further as well.
Okay, thank you. Appreciate that. And one question that we were wondering, I think you were going to speak briefly to some of the general, like some of those complaints that you get all the time. For instance, I understand that shares get sold at the very end of the day, and those are reported to you, and you look into those reports. And I wonder if you could just speak to that.
Kind of along the lines of what I was explaining before, is just that, what you'll see publicly on the ticker tape, we go so much further with what we drill down on. So if you think there's coordinated trading at the end of the day, we've certainly seen inquiries that legitimately someone honestly thinks there's something going on, and we look at what they've seen. What they're seeing is not even a montage of all of the marketplace trading, for example. That's a common one. Or they may think that anonymous broker one is one broker, and it may or may not be. But when we look at it, we can tell if it is all one broker, and then within that, is it all one client or related clients or one desk? So we drill down. So we drill down and look at that, and we can see immediately, like actually who it is that's trading and the impact they may be having on the market. Spanning out our analysis over the last, whatever the trend is to look at initially, the first week, month, whatever it is, we can see the pattern of that activity. We certainly are in a position to reach out and do inquiries with the dealer in real time if there's anything that we want to get answers to, or to put them on notice that this is activity that looks unusual to us. So we're basically triaging this stuff, analyzing this stuff in real time, and with that level of drill down right there at our fingertips. So that's really what we have. I mean, we also have alerts that will also alert us to unusual closing activity, whether that's up or down. So we have alerts that will automatically flag that stuff for us. So if we do get an inquiry, we'll compare that to those alerts and start putting together those puzzle pieces to do an inquiry. If we do see activity that is suspicious and perhaps manipulative, our review process is to refer that to the next stage in an investigation where it could lead to an enforcement action. So the next stage for us is to move it from the surveillance room, which is a real-time thing for equities, to move that to a deeper dive, deeper analysis group within the organization here. It's called Trade Review and Analysis. That's the name of the group. And they'll do a much wider review and analysis. They will request information from dealers. And at that point, if it really is smoking gun type of stuff, they'll refer that to our investigations and enforcement team, who will then take on the case. So, and if it's not our own internal investigations, we'll refer it to either the Securities Commissions or another authority. And then we also do share data in these groups, TRNA and investigation enforcement. We share data and information with other jurisdictions, most notably FINRA, in Europe as well. We're all part of the Intermarket Surveillance Group, which allows the sharing of information when it comes to case analysis, casework, and in terms of surveillance best practices as well. So I feel like I'm just scratching the surface there, but just to give you a sense as to what we do, it's a rigorous workflow, and that's the process.
Alex, maybe I can jump in as well. I wanted to reinforce.
Just sort of follow up on that. Yeah.
I just wanted to follow up and reinforce that if there are any issuers out there that feel that their stock is being manipulated, we encourage you to contact us on the desk. Any of the surveillance staff, we're here to listen to you, and we understand that you have concerns about trading, but we also expect that when you do contact us, give us scope, give us a picture, let us understand what is happening, to come and to present an allegation with little fact or little evidence makes our inquiries more difficult and our processes more difficult. Rest assured, if you see impropriety in trading in your stock, call us, point it out to us. We in surveillance look at every complaint that is presented to us, and we evaluate it, and we do pass it on to TRNA and record cases for these events.
Okay, thank you. And then just a bit of a follow-up to my initial question. My understanding is that when there are these number of shares that are sold in the last moments, and it's generally, you get complaints regarding these closeout transactions in the US, and people think that it looks like manipulation, but in those specific circumstances, that 99.9% of the time, the dealer just wants to exit their position at the end of the day, and they don't want to be holding those securities overnight.
We've studied this trend several times, multiple times. We rerun the same study just recently, and what we find is that these closing end of day transactions occur on stocks that are interlisted essentially on OTC, and then there are certain industry players that provide liquidity on those OTC markets, and need to exit of any position by the end of the day. And they come to our markets and they put the transaction on our markets to flatten their position. It's not manipulative anyway. It's not intended to be manipulative in any way. When we do look at this, we look for trends, elongated trends, sort of like what Alex was saying, a one downtick, but on one day. But let's see what happens. We'll take a wider look at it, and we'll look at what's the pattern over 2 weeks, or a month, or 3 weeks. to see if we can spot trends, patterns of these occurrences in the individuals that are doing it. We are able to see and do know the individuals or the dealers that do most of these transactions. We have that foresight into the trades, and rest assured, when we detect a regulatory offside, we do refer those matters to our enforcement, to our TRNA group for further review to be referred to our enforcement group.
Okay, thanks, Steve. I've got another question from the floor. So how long before the disclosure is early enough to be reviewed in the pre-file process?
We like to keep the vetting process as tight as possible, Alexander, quite frankly, to provide that service for the issuers. We don't want to necessarily be a burden on anyone, but if you have a draft of a release, the sooner you get to us, the faster we can get you through the process. If you want to line up your newswire, your meeting, and have all this content ready to go, when you want to coordinate it all. So really, we're at your behest to service you as you need. If you can get us a draft ahead of time, if you're looking for an answer quick, our turnaround times from when we receive it, 5 to 10 minutes in during a non-peak time. During the morning, I hope everybody understands it's peak time for us. That'll elongate to maybe 20 minutes to 30 minutes to get a response back. And having said that, I want to reinforce something that Chris said there. I'm encouraging all issuers to use our PR portal to send us their press releases. It sends us your private news, your sensitive news to us, cyber secure and encrypted, so it can't be intercepted or read by anyone on its way over to when you send it over to us.
Thank you so much, Steve. I just have one final quick question for Chris. Does CIRO have an opinion on photon versus fire assays, or is it up to the QP?
So current guidance says that fire assays are the more preferable procedure or the more preferable analytical technique for analyzing gold and metals. But photon assays are quite interesting. There are certified labs that provide photon assay services here in British Columbia. And my suggestion would be feel free to use photon assays, but validate those assays with fire assays as well.
Great, thank you. Excellent, thank you. Okay, so we're going to move on. I'm going to take a few minutes. I've already been introduced, but my name's Alexander Cosgrove, and I'm the Manager for Listed Company Compliance, and I'm going to spend a few minutes sharing with you about some new policies that came into effect, effective as of May 22nd, 2025. So we have got a new exchange hold period and a new extended hold period. So what is this exchange hold period? So it's in concert with the prospectus exemptions. It's a 4-month hold unless written approval is obtained from us. So any prospectus exempt issuance is subject to this 4-month hold. Without written approval from the exchange. I mean, we previously had this requirement for any issuances related to 2.24 for officers, directors, and employees, that companies needed to apply a hold unless they received written approval. It's really the same situation. It's really the starting point for any issuance now, though, is that there is a hold period for any prospectus exempt issuance. This is not applicable to the senior tier issuers, the non-venture issuers, for those of you that are a senior tier. And in general, we're expecting the biggest impact on this for 2.11, which is the business combination prospectus exemption, and 2.16, which is takeover bid. So if there's a takeover, so are there exceptions? Are there exceptions? Yeah. So if prospectus level disclosure is available, either in the form of a listing statement, information circular, or takeover bid for an acquisition or business combination, the exchange hold period is not applicable. For any share issuances for settlements for debt or private placements for cash, as long as the price of the financing is above the closing price at the time of the news release or above, there is no exchange hold period required. And then also, for life offerings, just to reiterate, we've gotten this question quite a few times. There is no hold period applicable to life offerings. The other exception is if a disclosure document that's acceptable to the exchange is posted, then we would be supportive of no hold, but we haven't received a proposal like that and we haven't seen such a document. So until such time as you can just rely on the information circular, a takeover bid, or a listing statement in connection to a larger transaction. And then just to speak briefly about what is the extended hold. So this is more for our discretion, and it could be a transaction's larger and we're just not clear about what the value is from the disclosure that's available. And we'd like to encourage disclosure getting out to the market for the shareholders, for potential investors. And so what we've done is we will require some additional disclosure, perhaps in the form of financial statements or a technical report, and the hold period will be in place until 10 days after that disclosure has been filed or posted and made available to the for the investing public and the shareholders. And with that, I would like to introduce Mark Faulkner to the stage. Hi, Mark. Welcome.
Thank you.
Hi, welcome. So we're also available for any questions that anyone has regarding anything to do with anything that we're talking about today. And it looks like we've got a question from the floor that would be for Alex, Steve, or Chris. And it's just further to our discussion we were just having.
Yeah. The question, would CIRO provide an overview of end-to-day trading dynamic, the thing that Steve was just talking about? That's actually not a bad idea. Like, we have done sort of case studies. There's one on our website where we anonymize the actual event, but we describe what we've done and how we reviewed activity and what we found. So yeah, that type of thing is probably a good idea, frankly. So thank you for the suggestion. We'll definitely take that back and look at it. And doing these educational events, we're trying to do more of those, and I think this one will be recorded. So hopefully that's accessible. And happy to keep the dialogue going. And if this is posted on a website later and someone's watching this, when Steve invited issuers to talk to the surveillance desk, it absolutely is only for the professionals in this industry to speak to our surveillance desk. We have a complaints and inquiries group that would take member of the public type of inquiries or complaints. And that's the appropriate channel there. But for the surveillance desk, we're dealing with issuers, traders, and marketplaces, and clearing corporations and other regulators. So that's what we're here for. Anyway, sorry, that was a segue, but hopefully I answered your question.
Thank you. That's excellent. I would like to ask a question that we received to Mark Faulkner. It says, why doesn't the CSE provide its members with the same monthly information as the TSXV with regards to the brokerage firms trading through House 1, Anonymous?
Thanks for bringing me on for the easiest question. We do. It's fairly new. We got approval and we started providing this report in June, so it's very recent. We haven't had a broad rollout. It's not advertised, but it is available through links on the website. Or the information is available in the, currently it's in the market data fee schedule. So if you look at the market data fee schedule on the CSE.com, you can find the information about it, the cost for subscribing, and how to get it. And I think in the coming weeks or months, there'll be a more broad rollout of it so that it's easier to find on the website. But it is available now after a long delay. And I think issuers will be quite appreciative of it with the number of comments and questions like this one that we've had over the last several years. I think it will be welcome.
And then I have a question too. Is there any direct source to get regular updated details on new share issuances, including conversions of warrants and RSUs? And well, I'll take that question. You can always refer to a CSE issuer's webpage for the current issued and outstanding. They should be updating that as any issuances occur. However, on a monthly basis, all the issuers are required to post a Form 7 within 5 trading days at the end of the month to indicate any share issuances, including stock option exercises, warrant conversions, RSU conversions, convertible debenture conversions on a monthly basis. So that is available to investors, and that you can also find that on the issuer's CSE webpage. So you just need to go to the CSE.com and you can search for any issuer in the top search bar by their trading symbol or their name, and then you can find out lots of interesting information there, including the issued and outstanding at the top and all their CSE posted filings. Let's see, do we have any other questions?
There's a question about I think it's about the hold period for shares issued to employees as a debt settlement. The change will be that it's automatic now unless there is approval from us. The hold would be automatic. I presume that the question is related to the use of the 224 exemption to employees rather than a shares for debt exemption. So it's always been more advantageous to the holder, of course, to use the 224 exemption and have no hold period under securities law. That's one of the things that we chose to address. As Alexandra mentioned earlier, 211, 216, and 224 will now automatically have a hold unless there is disclosure available to go along with that issuance. Our intention with the 224 is to treat it the same way we have since we introduced that requirement several years ago. I think it was 2018 when we introduced the requirement on 224, that we would do it, we would grant that approval fairly quickly. And we will continue to treat those issuances that way. And then the others we would look at more in depth.
And so we would just ask that individuals send an email to priceprotection@thecse.com or listings@thecse.com. Either one will come to the compliance group. Price protection is the one that we monitor immediately, but listings, of course, all eyes are on the listings email as well. Another question, is there any way for an issuer to find out the results of an investigation into irregular trading?
I can answer that one. We maintain confidentiality in our cases and as they develop and as they go through the process. Much like a criminal investigation, these are investigations, and they don't become public. Until unless there's a statement of allegation which gets filed by CIRO's enforcement team. So while this whole process, for the lack of a better term, secrecy is required during throughout the investigation, and when it gets to that point where an allegation needs to be published by our enforcement team, that's when it becomes public knowledge. And unfortunately, that also means that I and our surveillance staff are also curtailed from commenting anything further on the development of such case. So calling us and asking us for follow-up. While we appreciate your calls, we won't be able to comment on the development and the furtherance of that particular case. However, if you have information or details in furtherance of a case, we encourage you to send us that information, and as a follow-up, we can always add it to the file.
Yeah, and I would just add that our reviews are like our workflows are logged, are tracked, are documented, and even if we close something as unusual or maybe it happened once, that data point doesn't go away. So if something is reopened later, we're going to look at it in the context of what had transpired before, and one dot starts becoming two dots, starts becoming a trend, and that's kind of how that goes. But yeah, we can't share that information until it gets to the point, as Steve said, where it's public, unfortunately. But fair question earlier about how can we be more transparent in how we do what we do to give assurances that work is being done and that control is there.
Well, thank you both. Thank you all. And thank you all for joining us today. And this, as James mentioned, this presentation will be available on a replay. And thank you all again. And Have a wonderful day. Thank you, Mark. Thank you, Chris. Bye, Steve.
Thank you. Have a great day, everybody.